Good afternoon and welcome to Biztech's Asian Midday Market Watch. Our guest today is Vishnu Varathan, Head of Economics and Strategy at Mizuho Bank out of Singapore. Vishnu, as always, thanks for coming in.
Always a pleasure to be here, Brian. Thanks for having me.
Now, Vishnu, before we get your insights, let's take a look and see how the crypto markets are performing. And then we'll go ahead and look at how regional stock markets are performing. Now, Bitcoin continues its recovery. It's at 44,260. It's up 3.32%. Ethereum is at 3,153. It's up 2.19%. Moving on to regional stock markets, we've got the SGX STI index, which is at 3,385.64. It's up 0.57%. Now, across regional markets, the KLSC is at 1,532.86. It's up 0.14%. Shanghai is at 398.86. It's down 0.9%. The ASX All Ordinaries is at 7,501.7. It's up 1.18%. The Nikkei is at 27,330.5. It's up 0.3%. The Hang Seng is at 24,150.53. It's down 1.75%. And rounding up the numbers, we've got the Kospi, which is at 2,754.34. It's up 0.34%. Vishnu, what's your view on market performance in the first half of the day?
Well, it appears that outside of China, markets are fairly buoyant. I mean, they need not be rallying, with no end in sight or in an unbridled fashion, but it looks like markets are holding up. But there are several factors beneath all of this, and I think it's worth thinking about it. One thing for sure is the pace and the amplitude of tightening to come is certainly something that's under review. So particularly with the Fed now being seen doing 125 basis points of hikes by end of the year, out of which 75 basis points will be by middle of the year. So it's a pretty intensive rate hike cycle that they're factoring in. And we are not entirely sure that the markets have fully digested this, especially if you take it alongside the potential for the ECB to start normalizing, that's to say, start off by buying fewer bonds before they move on to a rate hike cycle. That's one. In the tech space as well, we've seen a little bit of sell-off in the bigger tech names, and of course the stake sell-off that might come with Alibaba is also weighing on the tech sector, and I think there's been some trickle-down effects of that we're seeing today. Markets for now are holding up, but the big point about this week is everyone's watching that inflation number. That's the US inflation number after the blockbuster US jobs. And depending on how they interpret the Fed to react to that, markets can move either way. So I'd say there is no certainty of one-way bets this week.
And Vishnu, then what other key points have you highlighted in today's market commentary?
But I mean, we're also thinking about, so we're thinking about two things mainly. One is how are risk sentiments shaping up? I mean, yes, markets have held up fairly well today in Asia session. There's been some recovery, but we bear in mind that for the year, NASDAQ has still sold off. So we're not entirely sure how the different sectors will perform, how overall sentiments will hold up, especially once I think investors start digesting both the rate hikes and the withdrawal of liquidity by the Fed. So that's one thing to keep in mind. But that's a long game and it's going to have a lot of undulations along the way. The other point around it is, of course, we've also seen the dollar coming off its highs from much earlier this year. And so our question is, with a hawkish Fed being priced in and then ECB gate crashing this party, we need to think about two things. One is whether to what extent the ECB is going to walk the talk. And if so, what impact it has on the dollar. Our big takeaway here is let's not be lulled into complacency about the dollar backing down. It may not. There are several factors behind this. One is the Fed may still be ahead in this game because of the CPI print. The other is the underlying geopolitical risks. Ukraine also means safe haven demand for dollar could act up. And finally, we don't see the renminbi appreciating a lot. That's going to anchor a lot of the Asian currencies. So we want to be quite cautious in this space, not to chase both currencies and assets higher in regional or in the EM space overall.
But one of the things that also is hanging over markets is the price of oil and its impact on inflation. What's your view on that?
But we think, so last year we did this exercise where we did this thought experiment with oil at $100. We came to the conclusion that oil will be, by the second half of this year, still disinflationary. I'm uncomfortable that the thought experiment is being lived out right now. We also had two other calls. We said, look, as much as the US doesn't want to, shale will respond to prices as it exceeds $90 and even $100. So that part of the bet is still on. However, the geopolitics of this has changed from geopolitics only initially entailing the possibility of Iran adding to supply. We've now got Russia, Ukraine that's keeping prices elevated. So unfortunately, for the next few months, we could see energy prices elevated, which means inflation is going to be quite high. That's going to give rise to a lot of policy uncertainty, but it's a bigger risk for EM Asia because we expect developed market inflation to peak sooner. And the longer oil stays elevated, there's a higher chance that EM Asia inflation will catch up and exceed, in which case real returns in this region won't look good. So oil is a particular risk that we want to watch, and you're certainly right to highlight that.
Um, Besides the inflation number coming out of the US, what are you looking for this week that will move markets?
Well, we think there's going to be just a lot of, to be very clear, in the calendar for the G3 or the developed markets, there really the focus is just US inflation, inflation, inflation. Um, the other headlines are all going to be around how China is returning to the market. Do we see good credit numbers? And especially we're also going to be watching as to whether there's any policy stimulus indications out of China, so that may have some bearing for this region. We are also watching central bank meetings this week. We've got the Reserve Bank of India, and we've got a pretty full calendar in the region, but none of these are going to distract from the longer term view of inflation and how central banks are going to react to it. The global central banks are going to react to it. And that remains the biggest risk in the economic space, and Russia, Ukraine being the thing to watch in the geopolitical space.
Vishnu, as always, thank you very much for coming on the show.
Always a pleasure, Brian. Thank you for having me.
Now, we've been speaking to Vishnu Varathan, Head of Economics and Strategy at Mizuho Bank, on Biztech's Asian Midday Market Watch. I'm Brian Fernandez. Please check out this video and podcast on our various platforms, and as well as our website, www.biztech.asia. Please like and subscribe to our various platforms. Thank you very much for tuning in.